Today I want to talk about how AMC has just hit a new all-time high borrowing fee and how Charles Payne is saying that shorts are in massive trouble due to growth stocks like Carvana. I also want to give an update on the new AMC lawsuit as something very interesting has just been discovered about Kevin. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Dave Murphy tweeted saying AMC is just consistently full of ripe conspiracies. Now you may remember a new lawsuit was filed yesterday by Kevin Barnes, who's allegedly a record holder of just 111 Class A shares and the same number of apes. And also that Barnes beneficially owns an unspecified number of additional securities and derivatives that he holds through brokerages. Now remember, being the beneficial owner means that Kevin Barnes may hold some of these derivatives through a company or through a fund, for example. And this next slide shows that Kevin Barnes is actually the managing director and chief procurement officer at BC Partners. Now BC Partners is a British international investment firm with over $40 billion of assets under management across private equity, credit and real estate in Europe and North America. Interestingly, its global headquarters are in London, and the firm invests across all industries. So obviously Kevin works for BC Partners, which is a hedge fund or a fund with over $40 billion of assets under management. It's possible that Kevin holds these derivative positions through BC Partners, which could very much be put options in AMC. And especially as we know that overseas firms, especially firms in Europe and UK, aren't ever punished for creating FTDs on American stocks. Because while Europe and the UK does have regulations like Regulation SHO for European and UK hedge funds investing in European and UK stocks, it doesn't have the same regulations if a European or UK fund is investing in American stocks. Basically saying that funds in the UK and in Europe can likely synthetically sell American shares and never be punished for it. So isn't it just coincidental that BC Partners is headquartered in the UK in London and can therefore get away with creating synthetic shares and failing to deliver or failing to locate those securities without any repercussions whatsoever? That is until these short sellers realise they're in way over their head with way too much leverage on a stock that's about to squeeze and collapse their hedge fund. Stocks Batman also tweeted the new all-time high borrowing fee for AMC, which is recorded currently at 1,058%. You can also see from this chart the borrowing fee hasn't even begun to collapse yet, and therefore this borrowing fee is likely still going much higher. I've stated in previous videos I believe it's headed to 2,000 if not 3,000%, but it's very cool to already see a new all-time high borrowing fee. This goes to show that I am indeed right and that we're likely seeing new all-time high FTDs in the first or second week of July, and we're already seeing new all-time high borrowing fees. But what is also very interesting about this is that AMC is on the list of the highest borrowing fees in the market, but AMC is for some reason on this list twice. We can see the ticker symbol AMC, AMC Entertainment Holdings, currently has a borrowing fee of 793%. But another AMC Entertainment Holdings, but this time with the ticker symbol AH9.GR, also has a very high borrowing fee of over 1,033%. As far as I was aware, the only two tickers for AMC should be AMC and APE. I've never heard of AH9.GR. I wonder if this is some other ticker these hedge funds and market makers are using to create synthetic AMC shares and hide them away under a different ticker. Because that way they can say absolutely, AMC only has 516 million shares issued in the float. Just please don't ask about AH9.GR, which has 2, 5 or even 10 billion shares, or maybe even more. That could be the ticker where they're hiding all of those synthetics and all of those total return swaps and all of those married and divorced puts. Again, obviously it is complete speculation that that could be or is where they're hiding the synthetics, but it just seems very interesting to have a completely separate ticker for AMC that I've never heard of. It'd be interesting to see if we can find this AH9.gr in their records somewhere and exactly how many shares are issued in that flow. Also, you can currently get a guaranteed free share of Tesla and a cash reward, which you could always use to buy more shares of AMC, GameStop, or a vape. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying deposit. Signing up to Moomoo is free, it just requires a temporary deposit, and it's a really great way to support me and to support the channel. And Moomoo is very easy to use, they've got tons of technical indicators, and you can even trade options with Moomoo as well. But as a result of this all-time high borrowing fee, it seems that both Ken Griffin and Doug Seif, who are Virtu, are struggling massively. Frank tweeted saying Kenny G or Ken Griffin. He must be running out of ideas to find lenders. Both public and private lenders are drying up. He said at some point his creditors are going to let him fail rather than keep shorting the market at a loss. We know Bank of America provides the margin loans for Citadel, but at some point Bank of America will recall their loans to Citadel because they will not be able to handle that risk tolerance. Just like when you or I trade on margin and you lose too much in a single trade, you end up being margin called. And Citadel will also end up being margin called by these lenders when they breach their risk tolerance. You'll also remember that Virtu stock just got downgraded to a sell rating. But I've actually got even more information. You may have seen this new press release that says calling all Virtu Financial investors. Final deadline to contract this law firm to try and recover your losses. Certain law firms are opening class action lawsuits for the investors into Virtu who have taken on significant losses in the Virtu stock. Usually you start seeing class action lawsuits against failing companies just as they're about to collapse. Because you may remember back in March, multiple law firms were opening class action lawsuits against Signature Bank and Silicon Valley Bank as well. When a company's stock price drops so significantly, many of these law firms try and get into these class action lawsuits to try and recover invested losses on behalf of investors. And it seems these law firms have seen the massive drop in the Virtu stock and expect the Virtu could imminently collapse. McSqueeze of the Cow also tweeted saying, fun fact, from its more recent high of $36 on the 8th of April 2022 to now, Virtu's stock has retraced 49.6%. Virtu's market cap has tumbled from approximately $3.9 billion down to just $1.7 billion, practically halving over the last 12 months. Both Virtu and Citadel are clearly struggling, likely due to their short positions going against them in a massive way. And as a result, Charles Payne tweeted saying he's not long, but he's thrilled to see Carvana shares soaring. Shorts and their friends in the financial media tried to bury this company back in January. Carvana pre-open this morning was up 12% and during the day was up like 50%. And even in the post-market hours today as well, Carvana is still running. And Charles says, I guess the dumb money won again. It seems these shorts are getting squeezed more and more, not just in the big tech names, but also in these risky growth companies as well. Stocks like Coinbase, Carvana, Affirm, Upstart, and many others have been absolutely running over the last couple of weeks. Many of these stocks just in the last few weeks alone are up 40%, 50%, 100%, some up even 200% in just the last few weeks. If you look in total year to date, Carvana is up something ridiculous like over 1,100%. Carvana is absolutely squeezing those shorts, causing even more shorts to close out of their short positions, pushing the price up higher. What is also interesting is that through his company, BC Partners, Kevin Barnes also has ties to Nomura. Nomura currently has 3 million put options on AMC right now as we speak. And as Jeff tweeted, he said, is that the same Nomura who announced back in April of 2021 that it anticipated a $2 billion loss from the Archegos default. And therefore we know that Nomura was lending money or providing the margin loans for Archegos and likely helping and aiding in their AMC and GameStop short put positions. Nomura is likely no stranger to these total return swaps, especially on GameStop and AMC, and likely has total return swaps of their own as well. And therefore, when AMC starts running, Nomura is likely to be in big trouble and will likely face billions of dollars in losses. On top of that, Kevin Barnes has also been denied by the courts multiple times trying to file injunctions onto AMC but has been denied previously on the counts of not holding enough AMC shares. And it's likely because Kevin still only holds 111 AMC and APE shares that he does not meet the SEC requirements to intervene in AMC lawsuits. To submit proposals like he's done, according to the SEC, a shareholder must hold at least $2,000 worth of common stock. But obviously holding just 111 shares, that puts him at owning less than $1,000 in stock, and therefore he cannot file any of these proposals. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.